Now let us discuss the last out of three topics under PAS 8. So this is prior period errors. So before we answer an illustrative problem for prior period errors, so let us first discuss the standards about the correction of prior period errors. So first, let us define what is an error. So these are omissions and misstatements in the financial statements for one or more periods arising from a failure to use or misuse of reliable information that was available when financial statements for those periods were authorized for issue and could reasonably be expected to have been obtained and taken into account in the preparation and presentation of those financial statements. So we have three types of errors. So first is the statement of financial position errors. So this type of error involves asset, liability, or equity accounts. So the errors could involve two or more real accounts, and it does not affect the income statement. Then the next type of error is the income statement error. So this time, the error involves nominal accounts. So it could be an income or expense. So it means that income statement errors could involve two or more nominal accounts. Again, it could be an income or expense. And the income statement errors, just like the statement of financial position errors, do not affect the other statements. So the income statement errors do not affect the statement of financial positions. So the correction of these errors, the statement of financial position and income statement errors, involves only the reclassification of accounts. So let us now proceed to the most difficult type of errors among the three. So this is the combination of statement of financial position and income statement errors. So this time, the error does not affect only one statement. It affects both statement of financial position and income statements. So that is why this is the most difficult among the three. So let us first discuss counterbalancing errors. So what is a counterbalancing error? So these are errors that, if not detected, are automatically counterbalanced or corrected in the next accounting period. So when we say counterbalancing errors, there is no problem if the entity was not able to discover the error because it is a self-correcting error. And when we say self-correcting, the corrections are made in retained earnings. So it means that as the time goes by and the entity is still not able to discover error, the errors will automatically self-correct in the retained earnings. And in order to self-correct the retained earnings, it requires to affect net income in two or more years in order to counterbalance. So this is called a counterbalancing error because it affects the net income in two or more years. And the effects of the misstatements in net income in those years will automatically offset or self-correct in the retained earnings. So the examples of counterbalancing errors include accruals, deferrals, inventory sales, and purchases. Now let us proceed to non-counterbalancing errors. So this time these are errors that, if not detected, are not automatically counterbalanced or corrected in the next accounting period, which results to the misstatement of retained earnings. So unlike counterbalancing errors, under non-counterbalancing errors, these are the types of errors that the entity needs to be discovered. If these errors were not discovered, the entity is unaware that the retained earnings is incorrect. So that is why, unlike counterbalancing error, non-counterbalancing errors should be discovered. Of course, if such misstatement is material. And the reason that non-counterbalancing errors is not a self-correcting error because it only affects the net income in the year the error is committed. So that is why this is a non-counterbalancing error. An example would be, the most common is the depreciation. Again, to differentiate counterbalancing error from non-counterbalancing error, counterbalancing error are self-correcting error, while non-counterbalancing errors do not self-correct the errors automatically. And in order to counterbalance or self-correct, counterbalancing errors affects 2 or more years of net income. However, for non-counterbalancing error, the reason why this is not self-correcting because it only affects 1 year of net income, and that is the year when the error has been committed. And what is the accounting treatment for the correction of prior period error? So that is retrospective. And when we say retrospective, even if the error is committed in the prior years, the error must still be corrected. So if there is a discovery and correction of prior period error, what are the disclosure requirements? So first is the nature of the error. Next is the amount of the correction and each FS line item affected with the computation of basic and diluted EPS. Then the amount of correction at the beginning of the earliest prior period presented. Then if retrospective restatement is impracticable for a particular prior period, the circumstances that led to the existence of that condition and a description of how and from when the error has been committed. So though the prior period error is similar to the change in accounting policy, correction of prior period error and the change in accounting policy shall be applied retrospectively. However, there are times that retrospective application is impracticable, and one of the reasons may be due to the significant cost associated with the correction of such error or the application of the change in accounting policy. So if the time comes that the retrospective application is impracticable, the circumstances must be properly disclosed in the notes to the financial statements. So how is the financial statement presented if there are corrections of prior period errors? So an entity shall correct material prior period errors retrospectively in the first set of financial statements authorized for issue after their discovery by. So the standard states that the retrospective correction of prior period errors must be related to a material prior period error. So first is the restatement of comparative amounts for the prior periods presented in which the error occurred. So for example is the errors were made in 2014 and discovered in 2015. So in this case, the current year is 2015 and the errors were made in 2014. So the first set of financial statements that were authorized for issue after their discovery is 2015. Again, 2015 is the first set of financial statements after the discovery of the error, which means that the discovery is in 2015, which is after 2014, the year the error was committed. And since when we prepare the financial statement in 2015, it will be comparative with 2014, it means that the 2014 financial statements is still presented together with the 2015 balances. That is why the 2014 is the prior period presented in the financial statements in 2015. So here, the comparative financial statements shall be restated as far as the prior period presented is concerned, and that is 2014. So it means that the amounts affected shall be restated. The next is, if the error occurred before the earliest prior period presented, restating the opening balances of assets, liabilities, and equity for the earliest prior period presented. So for example is the errors were made in 2013 and discovered in 2015. So again, the current year is 2015 and the financial statements in 2015 is comparative with 2014 financial statement. The error was made in 2013 and it was discovered only in 2015. So 2013 is the period before the earliest prior period presented. And based on this example, the earliest prior period presented is 2014. Again, 2013 is the period before the earliest prior period presented. So the earliest prior period presented is 2014. So the accounting treatment would be the restatement of the opening balances of assets, liabilities, and equity for 2014. So that is why when we present the 2014 side by side with 2015, the beginning balances of 2014 shall be restated. So now let us answer an illustrative problem to apply all these concepts about correcting prior period errors. So let us answer a problem on correction of prior period error. So since we have three types of prior period errors, we are going to focus on the prior period error that involves a nominal account and a real account. And these prior period errors have two classifications. So they are the counterbalancing errors and the non-counterbalancing errors. So the focus of this discussion will be non-counterbalancing errors. So we have a separate problem for a counterbalancing errors and another problem which contain both counterbalancing and non-counterbalancing errors. So ABC company has the following information during the year. So the problem provides the information about the retained earnings and the unadjusted net income of the entity from 2018 until 2020. And our errors includes overstatement of depreciation expense, omission of depreciation, and failure to amortize discount on bonds payable. So all these errors are non-counterbalancing errors. Again, what is a non-counterbalancing error? So non-counterbalancing errors are errors that, when left undetected, it results to incorrect retained earnings until the time the error is discovered. So that is why it is called non-counterbalancing error. So to analyze the effects of the prior period errors on the retained earnings and net income of the entity, so let us use this illustration. So these are the relationships of real accounts and nominal accounts. So first is assets and income. So what is the relationship between asset and an income? So they have a direct relationship, which means that if an asset is overstated, the related income is also overstated. And if an asset is understated, it means that its related income is also understated. So similar relationship applies to expenses and liability. So both these accounts have direct relationship. So again, when we say direct relationship, if an expense account is overstated, its related liability is also overstated. And if a liability is understated, its related expense account is also understated. So let us now proceed to the relationship between asset and expenses. So the relationship of asset and expense is inverse. When we say inverse, if an asset is overstated, its related expense account is understated. And if an asset is understated, its related expense account is overstated. So same relationship applies between income and liabilities. Moreover, inverse relationship also applies between asset and liabilities, as well as between expenses and an income. So both of these have inverse relationship. So since our focus on this discussion are prior periods, that involves both nominal and real accounts. So we are going to analyze the effects of the prior period errors based on the relationships between asset and income and liabilities, liabilities and expenses and assets. So our analysis will cover the years 2018 until 2020, and the accounts to be analyzed are the retained earnings and net income. So let us start with the unadjusted balances. So for the net income in 2018, based on our given data, we have 600,000 pesos. And the retained earnings at the end of 2018 based on the problem is 1.5 million. Then the net income in 2019 is at 500,000 pesos. And at the end of 2019, RE is 2 million pesos. So that is 1.5 million plus 500,000 is equals to 2 million pesos. Then the net income in 2020 is 550,000 pesos. And the retained earnings at the end of 2020 is 2,550,000 pesos. So let us start the analysis of the overstatement of depreciation expense. So based on the problem, we have two errors related to the overstatement of depreciation expense. So let us start with the 2018 error. So that is an overstatement of 9,000 pesos. So the relationship between depreciation expense and net income is inverse. So it means that if the depreciation expense is overstated, it means that the net income is understated. And to correct the understatement of net income, it is necessary to add the understatement. So in 2018, the unadjusted net income is 600,000 pesos. So if in 2018 the depreciation expense is overstated by 9,000 pesos, it means that the 600,000 pesos is understated by 9,000 pesos. So in order to correct the understatement, we need to add the 9,000 pesos. So that is for 2018. So if the net income in 2018 of 600 is understated and this was close to the retained earnings at the end of 2018, it means that the 1.5 million retained earnings in 2018 is also understated. So to correct the understatement of the 1.5 million, we need to again add the 9,000 pesos. However, for the succeeding years, the question is the 9,000 pesos still have an effect on the net income retained earnings in 2019 and 2020? Since this error is a non-counterbalancing error, the net income for 2019 and 2020 will not be affected. However, since the error is only discovered in 2020, it means that the retained earnings are all incorrect and are understated by 9,000 pesos. So the 2 million retained earnings is understated by 9,000 pesos as well as the 2,550,000 pesos retained earnings at the end of 2020 because the 600,000 net income in 2018 that was understated by 9,000 is included in the 1.5 million, in the 2 million, as well as in the 2.55 million retained earnings ending. So in order to correct the understatement of the retained earnings balances, so we will add again 9,000 to the retained earnings in 2019 and 2020. So let us proceed now to 2020. So in 2020, the depreciation expense is again overstated by 20,000 pesos. And again, the relationship between expense and income is inverse. So if the depreciation expense in 2020 is overstated, the net income of 550,000 in 2020 is understated. And in order to correct the understatement of the net income, we need to add back the 20,000 pesos. And also, an addition of 20,000 pesos shall be made to the retained earnings at the end of 2020 because the 550 net income in 2020 was closed to the retained earnings at the end of 2020. So after the overstatement of depreciation expense, let us now proceed to the another error on depreciation but in 2019. So that is an omission of depreciation. So when we say omission, it means that the depreciation expense was not recorded, and that is for 6,000 pesos. And if the depreciation expense is not recorded, it means that the depreciation is understated. And since expense and net income have inverse relationship, so the understatement of depreciation will result to the overstatement of the net income. So it means that the 500,000 net income in 2019 is overstated by 6,000 pesos. So in order to correct the overstatement of 500,000 pesos, so that will be a deduction for 6,000 pesos. And again, since net income is being close to retained earnings, so if the 500,000 was close to the 2 million retained earnings, it means that the 2 million retained earnings is also overstated by 6,000 pesos. So to correct, we need to deduct 6,000 pesos. And since this is a non-counterbalancing error, it will have no effect on the net income in 2020, but it has an effect on the retained earnings in 2020. That is why, in order to correct the overstatement of 2.55 million by 6,000, we need to again deduct the 6,000 pesos. So why do we need to deduct the 6,000 pesos from the 2.55 million retained earnings? Because the 500,000 is part of the 2.55 million retained earnings at the end of 2020. So now let us proceed to the last error, which is the failure to amortize discount on bonds payable. So if you remember in Intermediate Accounting 2, the entry to record the amortization of discount on bonds payable is debit interest expense and credit discount on bonds payable. So between the two accounts, the nominal account is the expense account, the interest expense, which needs to be debited when there is an amortization of discount. And we all know if an interest expense is being debited, it is an increase in interest expense. And failure to do so, it means that the interest expense is not recorded. Therefore, the interest expense is understated. So if the interest expense is understated, net income is overstated because expense and net income have inverse relationship. So let us now proceed to the 12,000 pesos understatement of interest expense in 2018. So the 600,000 pesos net income in 2018 is overstated by 12,000 pesos. So to correct the overstatement of the 600,000 net income, we need to deduct 12,000 pesos. So that is by recording the interest expense. So again, since the 600 is part of the 1.5 million pesos, the 1.5 is again overstated. That is why we need to deduct the 12,000 pesos from the 1.5 million retained earnings at the end of 2018. And again, since this is a non-counterbalancing error, it will have no effect on the net income in 2019, but it has an effect on the retained earnings in 2019. So that is a deduction again for 12,000 pesos to correct the retained earnings ending in 2019. And in 2020, it has no effect still on the net income in 2020, but there is an effect on the retained earnings. That is why we need to deduct again 12,000 pesos. So always remember that when the error is a non-counterbalancing error, the error will have no effect on the net income in the following years, but the effect will be seen in the retained earnings. That is why we deducted the 12,000 from the retained earnings in 2018, 2019, and 2020 is because the 600,000 pesos net income in 2018, which is overstated by 12,000, is part of the 1.5 million, the 2 million, and the 2.55 million because this particular row is unadjusted amounts. So after these adjustments in our spreadsheet, let us now determine the adjusted balances of the retained earnings and net income for each year. So let us start with 2020. So the retained earnings adjusted balance at the end of 2020 is 2,561,000 pesos. Then the net income at the end of 2020 has an adjusted balance of 570,000 pesos. And in 2019, the ending retained earnings is 1,991,000 pesos. And the net income in 2019 has an adjusted balance of 494,000 pesos. In 2018, the adjusted retained earnings is 1,497,000 pesos and the adjusted net income in 2018 is 597,000 pesos. So after we have prepared this table, let us now prepare the journal entries that will be recorded in the books of ABC Company. And since the current year is 2020, the correcting entries shall be prepared in 2020 because the books in 2019 are already closed. So there are two ways to record the correcting entries in 2020 based on two assumptions. And those assumptions are if the 2020 books are already closed or the 2020 books are not yet closed. So we are going to prepare the entries for both scenarios. So let us now prepare the correcting entries that will be made in 2020. Again, since the current year is 2020, these correcting entries will be prepared as of December 31, 2020. And we are going to prepare the correcting entries based on two assumptions, and these are 2020 books are not yet closed. So it means that the books are still open. And when we say not yet closed, the nominal accounts are not yet closed to the retained earnings. So it means that we have not prepared for the closing entries. And the other assumption is if the 2020 books are already closed. So it means that in this scenario, the nominal accounts were already closed to the retained earnings. So it means that we already prepared the closing entries. So let us start with the 2020 books are not yet closed. So to start the correcting journal entries, so these are to be taken from this table. So this table will facilitate us in the preparation of the correcting entries. And since the current year is 2020, our adjustments will be taken from this two particular columns. So this net income column in 2020 and the retained earnings ending in 2019. Since the 2020 books are still open, it means that the nominal accounts are not yet closed to the retained earnings. It means that we can still adjust the nominal accounts in 2020. However, for the nominal accounts in the prior periods, so that will be for 2019 and 2018, we can no longer use nominal accounts in order to adjust the net income in 2018 and 2019 because the books in 2019 and 2018 were already closed. So that is why, in order to correct the net income recorded in 2018 and 2019, we need to correct the retained earnings. And that will be the retained earnings at the start of 2020. So that will be the ending retained earnings in 2019. So by correcting the retained earnings at the start of 2020, we can correct the net income in 2018 and 2019. So again, our procedure will involve correcting nominal accounts in the current year, which is 2020, and correcting net income in the prior periods by correcting the retained earnings account. So let us start first with the overstatement of depreciation expense. So to correct the net income in 2020, it includes an addition of 20,000 pesos. So an addition to net income is a credit because an increase in net income involves a credit to an income account or an expense account. So what nominal account do we need to credit in order to adjust the net income? And that nominal account is related to depreciation. So of course, that will be depreciation expense. So by crediting depreciation expense, we are able to increase net income by 20,000 pesos. And to correct the net income in the prior period related to the overstatement of depreciation expense in 2018, we need to adjust the retained earnings at the start of 2020. So that is by increasing retained earnings by 9,000 pesos. And the entry to increase retained earnings involves a credit to retained earnings for 9,000 pesos. Since these are errors in depreciation expense, and the journal entry to record the depreciation expense involves a credit to accumulated depreciation, so it means that the overstatement of depreciation expense also resulted to the overstatement of accumulated depreciation. And to correct the overstatement of accumulated depreciation, we need to debit accumulated depreciation for a total amount of 29,000 pesos. And the 29,000 pesos is the cumulative overstatement in the depreciation expense. Now, let us proceed to the next error, which is the omission of depreciation or understatement of depreciation expense. So, based on our table, there is no effect on the 2020 net income. However, there is an effect on the retained earnings at the start of 2020, and this pertains to the error in the net income in 2019. So how do we correct the retained earnings at the start of 2020? That is by a decrease by 6,000 pesos, and that requires a debit to retained earnings for 6,000 pesos. And since this is an understatement of depreciation expense, it involves also the understatement of accumulated depreciation for 6,000 pesos. So in order to correct the understatement of accumulated depreciation, we need to credit accumulated depreciation so that it will increase by 6,000 pesos. So let us now proceed to the last error, which is the failure to amortize discount on bonds payable or the understatement of interest expense. So again, since this is a prior period error, this has no effect on the 2020 net income. So we are not going to use any nominal account. Instead, in order to correct the 2018 net income, we need to adjust the retained earnings at the start of the year. And that is by decreasing retained earnings for 12,000 pesos. And again, to decrease retained earnings requires a debit to retained earnings. Now, what is the account title to be credited? So of course, the journal entry to record the amortization of discount on bonds payable is debit interest expense and a credit to discount on bonds payable. It means that we need to credit discount on bonds payable because the account discount on bonds payable is a real account. So that is why part of our correcting entry is a credit to discount on bonds payable for 12,000 pesos. So these are the correcting entries, assuming that the 2020 books are not yet closed. So what will be the journal entry assuming the 2020 books are already closed? It means that we can no longer use any nominal accounts to correct the net income in 2020 because again, the nominal accounts are already close to the retained earnings. So in order to correct the net income in 2018, 2019, and 2020, if the books are already closed, we can only correct the retained earnings account. So that is why if the 2020 books are already closed, our correcting entries will be taken from this column. So let us again start with the overstatement of depreciation expense. So remember that we can no longer use a nominal account. Instead, we are all using real accounts because nominal accounts were already closed to the retained earnings. So let us start with the overstatement of depreciation expense. So similar to this entry, assuming the books are still open, we debited accumulated depreciation for 29,000 pesos. And the retained earnings is credited for 9,000 pesos. And the depreciation expense was debited for 20,000 pesos. So our correcting entry will be similar to this correcting entry except for the depreciation expense of credit to 20,000 pesos. And that is because depreciation expense is a nominal account. And again, once the books are already closed, we can no longer use a nominal account. So that is why instead of crediting depreciation expense, we are going to credit retained earnings. So the journal entry would be debit accumulated depreciation 29,000 pesos and a credit to retained earnings for a total of 29,000 pesos. So by replacing depreciation expense with retained earnings account, the total credit to retained earnings will be 29,000 pesos. So let us proceed to the omission of depreciation expense. So our journal entry, if the books are not yet closed, is a debit to retained earnings and a credit to accumulated depreciation. So since these accounts are both real accounts, it means that if the books are already closed, this same correcting entry is the same entry to be prepared if the books are already closed. So that is why debit retained earnings for 6,000 pesos, then accumulated depreciation for 6,000 pesos. Again, since both account titles are real accounts, so this same journal entry will be the correcting entries assuming the books are already closed. Then for the failure to amortize discount on bonds payable, the journal entry here is a debit to retained earnings for 12,000 and a credit to discount on bonds payable for 12,000. And again, these accounts are both real accounts. That is why the same entry would be the entry to be made assuming the books are already closed. So that will be a debit to retained earnings of 12,000 pesos and a credit to discount on bonds payable for 12,000 pesos. So if you are going to compare the correcting entries in both assumptions, the only difference is that the correcting entry that has a nominal account, and that is the 20,000 pesos. Because again, if the books are already closed, we can no longer use nominal accounts. It will be replaced with retained earnings. But for the correcting entries in this part that are real accounts, the same correcting entries are prepared assuming the 2020 books are already closed. So after we are done with the correcting entries, let us now prepare the revised statement of changes in retained earnings. Again, the revised changes in retained earnings only applies to 2019 because the current year is 2020 and we haven't prepared the financial statements in 2020. Of course, if errors were discovered in 2020, we will prepare the financial statement only after we have corrected the errors. But for 2019, since the financial statements in 2019 were already published, we need to revise the 2019 account balances when it will be comparative with 2020. So to start, the first line item would be the unadjusted retained earnings beginning. Then, the effects of the prior period error correction, Then after the adjustments is the adjusted retained earnings beginning. Then since we have no dividend payments, we only have net income. Then after we add the net income, this will be the retained earnings ending. So to start the 2020, the unadjusted retained earnings beginning is 2 million pesos. So this is the ending retained earnings in 2019. Of course, this will be the unadjusted beginning retained earnings in 2020. So the adjusted retained earnings beginning in 2020 is 1,991,000 pesos. And in order to correct the 2 million so that it will be adjusted to 1,991,000 pesos, the adjustments are the 9,000 pesos, negative 6,000 pesos, and negative 12,000 pesos. So the net effect of this adjustment is a negative 9,000 pesos. And this is the net effect of the adjustments of 9,000, 6,000, and 12,000 pesos. So 2 million minus 9,000, the adjusted retained earnings that will appear in our statement of changes in retained earnings is 1,991,000 pesos. And the net income to be added to the adjusted balance of 1,991,000 pesos is the 570,000 net income. So that will be the amount to be added. So 1,991,000 pesos plus 570,000 pesos is 2,561,000 pesos. So this is the adjusted ending balance of the retained earnings. Then since this is a comparative financial statement, this will be comparative with the 2019. However, the amount should be the revised account balance. So to start the revised account balances in 2019, the unadjusted retained earnings at the start of 2019 is the 1.5 million pesos. So the 1.5 million pesos is the unadjusted retained earnings at the end of 2019. And since this is ending balance of 2018, this is the beginning balance in 2019. So the adjusted balance of the retained earnings at the start of 2019 is 1,497,000 pesos. So it means that in order for us to adjust the 1.5 million to 1,497,000 pesos, we need the effect of the two adjustments. So these are the 9,000 and 12,000. And the net effect of these errors is an adjustment of 3,000 pesos negative. So that is the difference between negative 12,000 and positive 9,000 pesos. So 1.5 million minus 3,000 pesos is 1,497,000 pesos. Then let's add the net income in 2019. So based on our table, the net income that is added to 1,497,000 is the adjusted net income of 494,000 pesos. So the amount to be added is 494,000 pesos. So that the total of 1,497,000 plus 494,000 pesos is the adjusted retained earnings at the end of 2019 for 1,991,000 pesos. And based on our table, that is the adjusted balance of ending retained earnings in 2019. So let us answer another problem. However, our focus now is counterbalancing errors. So what differs counterbalancing errors from non-counterbalancing errors? So unlike non-counterbalancing errors, counterbalancing errors affects 2 or more years of net income. Based on the previous problem that we have answered, non-counterbalancing errors only affect 1 year of net income. That is why the retained earnings are always incorrect as long as the error is not yet discovered. However, for a counterbalancing error, since the affected income is 2 or more years, the retained earnings are already corrected after several years. Again, when we say counterbalancing errors, these are self-correcting errors. So it means that if the error is committed in a particular year, it will self-correct by affecting the net income in the succeeding years. And if it affects the succeeding year's net income, it means that the net income in those succeeding years are also incorrect. So it means that if an error is a counterbalancing error, the retained earnings are being corrected by affecting 2 or more years of net income. In our problem, we have 3 types of counterbalancing errors. So these are related to inventory, prepaid insurance, and accrued rent. So again, our unadjusted information are both retained earnings and net income. So we have no information about the details of the income statement. So our analysis again will start from the unadjusted balances. So the unadjusted balances of retained earnings and net income in the years 2020, 2019, and 2018 are as follows. So starting with the 2018 unadjusted net income, so that is 600,000 pesos. Then the retained earnings at the end of 2018 is 1.5 million. Then the net income in 2019 is 500,000 pesos. Then 1.5 million plus 500,000 pesos is 2 million pesos, which is the unadjusted retained earnings in 2019. Then add the net income in 2020, which is 550,000 pesos. So our retained earnings at the end of 2020 is 2.55 million pesos. So again, this formula is based on the assumption that there is no dividend payments. So now let us start the analysis of the effects of the prior period errors, starting with the overstatement of inventory. So based on the problem, in 2018, inventory is overstated by 9,000 pesos. So which means that the ending inventory that appeared in the statement of financial position in 2018 is overstated, as well as the ending inventory that is used in the computation of cost of goods sold in 2018 is also overstated. So what is the effect of the overstatement of 9,000 pesos in the 2018 net income? So again, let us use this in our analysis. Since ending inventory appears in the statement of financial position, it means it is an asset. And what is the relationship of an asset with income? It is direct, which means that if the ending inventory is overstated, it means that the income is also overstated. And why is income overstated if the ending inventory is overstated? Because the ending inventory is being deducted from the cost of goods available for sale to arrive at the cost of goods sold. So if the ending inventory is overstated, it means that the cost of goods sold is understated. And if the cost of goods sold is understated, it means that the net income is overstated. So it means that the 9,000 overstatement of the inventory in 2018 resulted to the overstatement as well of the net income in 2018. So to correct the overstatement of the 2018 net income, we need to deduct the 9,000 pesos from the 2018 net income. And of course, the retained earnings at the end of 2018 is also overstated by 9,000 pesos because part of the 1.5 million pesos is the 600,000 net income, which is overstated by 9,000. And to correct the overstatement of the 1.5 million retained earnings, we need to deduct again the 9,000 pesos. So since this is a counterbalancing error, it will affect the succeeding years. And how will this affect the succeeding years? Since the inventory is the ending inventory in 2018, it means that it will be the beginning inventory in 2019. The beginning inventory does not appear in the statement of financial position at the end of 2019 because it is the beginning inventory. The beginning inventory only appears in the computation of cost of goods sold in the income statement. So how will the beginning inventory affect the net income? So since beginning inventory is part of the computation of the cost of goods sold and cost of goods sold is a type of expense, the relationship of expense with income is inverse. So that is why, so if the beginning inventory is overstated, it means that the cost of goods sold is overstated. And since the cost of goods sold is overstated, the net income is understated. That is why the relationship between beginning inventory and income is inverse. Again, if beginning inventory is overstated, the net income is understated. So based on the problem, the net income in 2019 is 500,000 pesos. And this is computed with the beginning inventory that is overstated by 9,000 pesos. So which means that the 500,000 net income in 2019 is understated. And in order to correct the understatement of the 500,000 peso net income in 2019, we need to add back the 9,000 pesos to net income. Then, what will be the effect of the 9,000 peso error in the ending retained earnings for 2019? So since this is a counterbalancing error and the 9,000 error already affected 2 years of net income, the retained earnings at the end of 2019 has already self-correct. So that is why there is no adjustment to the retained earnings at the end of 2019. And that is because the overstatement of the 2018 net income is already corrected through the understatement of 2019 net income. And both of these net income are part of the 2 million retained earnings, where the overstatement of one is already offset with the understatement of the other. So that is why the 9,000 is already corrected at the end of 2019. And another reason would be mathematically, based on this equation, negative 9,000 plus 9,000 is equals to 0. That is why the 2 million is already correct when it comes to the 9,000 prior period error. So if the 9,000 peso error does not affect the 2019 retained earnings, it does not also affect the 2020 ending retained earnings. So now let us proceed to the 2019 error on inventory. So this time, the ending inventory as of 2019 is understated. And what is the effect of the understatement of 2019 ending inventory on net income? Again, ending inventory appears in the statement of financial position as an asset. And the relationship of asset with income is direct. It means that if the ending inventory is understated, the net income is also understated. So again, since the ending inventory in 2019 is understated and ending inventory has a direct relationship with net income, it means the 2019 net income is also understated. And to correct the understatement of the 500,000 net income, we need to add back the 6,000 pesos. And of course, it will have an effect also in the retained earnings at the end of 2019. So that is why we need to add back again the 6,000 pesos to retained earnings because the 500,000 peso net income, which is understated by 6,000, was close to the retained earnings at the end of 2019. That is why the 2 million pesos is also understated by 6,000 pesos. And to correct the understatement, we need to add the 6,000 pesos. And again, since this is a counterbalancing error, it will affect the 2020 net income. So how is the net income in 2020 affected by the 6,000 error in 2019? That is because the ending inventory in 2019 becomes the beginning inventory in 2020. Again, based on this analysis, beginning inventory is part of the cost of goods sold. And beginning inventory has a direct relationship with cost of goods sold. That is why if the beginning inventory is higher, the cost of goods sold is also higher. If the beginning inventory is lower, the cost of goods sold is also lower. And the cost of goods sold is an expense account. So since the cost of goods sold is an expense account, it has an inverse relationship with income. So if they have an inverse relationship, it means that if the expenses are overstated, it means that the income is understated, and vice versa. So for 2020, the beginning inventory is understated by 6,000 pesos. And again, since the beginning inventory is understated, it means that the net income in 2020 is overstated because they have an inverse relationship. So if the net income in 2020 is overstated, to correct the overstatement, we need to deduct a 6,000 pesos from the net income column in 2020. And another question will be, will the 6,000 peso affect the retained earnings at the end of 2020? Again, the answer is no, because this is a counterbalancing error. And again, when we say counterbalancing error, the misstatements of net income for 2 or more years has already corrected the retained earnings. So it means that the understatement of the 500,000 net income is already corrected when the net income of 2020 becomes overstated. That is why the overstatement and understatement at the end of retained earnings in 2020 has already upset. And mathematically, 6,000 minus 6,000 is equals to 0. Then last, for inventory, let us proceed to 2020. Again, same procedure with 2018. The ending inventory in 2020 is overstated. And ending inventory has a direct relationship with net income. So it means that the 2020 net income is also overstated. And to correct the overstatement of net income in 2020, we need to deduct the 20,000 pesos. And of course, if the 550,000 is part of the 2.55 million retained earnings at the end of 2020, it means that the ending retained earnings in 2020 is also overstated by 20,000 pesos. That is why the 20,000 peso deduction must also be part of the retained earnings adjustment. Now we are done with the errors related to inventory. Then now let us proceed to prepaid insurance. So prepaid insurance is an asset account. And since this is an asset account, asset has a direct relationship with net income. So that is why in 2018, if the prepaid insurance is understated by 12,000 pesos, it means that the net income in 2018 is also understated by 12,000 pesos. And how do we adjust the understatement of the net income in 2018? That will be an addition to net income to 600,000 pesos. And also, since the net income in 2018 is understated by 12,000 pesos, it only means that the retained earnings at the end of 2018 is also understated by 12,000 pesos. That is why, in order to correct the retained earnings at the end of 2018, we need to again add 12,000 pesos. And since prepaid insurance is a counterbalancing error, it means that in order to self-correct, the succeeding net income should also be misstated. So the question is the net income in 2019 also affected by the 12,000 error made in 2018? So the answer is yes. So the net income in 2019 is also misstated. And what is the misstatement of 2019 net income? The misstatement in the 2019 net income is an overstatement of 12,000 pesos. So again, in order to self-correct the 12,000 pesos error, an understatement in 2018 will only self-correct by an overstatement of the 2019 net income so that the retained earnings at the end of 2019 is already correct because of the offsetting of the understatement in 2018 and the overstatement in 2019. So that is why if the net income in 2019 is overstated by 12,000 pesos, in order to correct the overstatement, we need to deduct a 12,000 pesos adjustment. So that is why the retained earnings at the end of 2019 is already correct. So mathematically, this is 12,000 is equals to 12,000 pesos plus negative 12,000 is equals to 0. So since the 12,000 pesos is already corrected in 2019, it means that the 2020 retained earnings is already correct. So now let us analyze the effects of the errors in 2018 related to prepaid insurance. So the error in 2018 is due to the entity's failure to record the adjusting journal entry in 2018, and that is a debit to prepaid insurance for 12,000 pesos and a credit to insurance expense for 12,000 pesos. So the understatement of the prepaid insurance resulted to the understatement as well of the net income in 2018, and that is because of the entity's failure to reduce its insurance expense in 2018. Because by preparing this journal entry, the insurance expense that was recorded in 2018 should be reduced by 12,000 pesos. And why is the insurance expense in 2018 must be reduced by 12,000 pesos? Because that insurance expense should be recorded as an expense in 2019. That is why if the entity was able to prepare the journal entry in 2018, another entry would be prepared in 2019, which is the recording of the insurance expense of 12,000 in 2019 and a credit to prepaid insurance for 12,000 pesos. Of course, this journal entry in 2019 will only be prepared if the entity previously recorded the adjusting entry at the end of 2018. Again, the 12,000 insurance expense is not an expense in 2018. It should be an expense in 2019. However, the entity's failure to prepare these journal entries, the insurance expense was erroneously recorded in 2018. That is why the 2018 net income is understated because the insurance expense was erroneously recorded in 2018. And since the entity did not record the insurance expense in 2019, the 2019 net income is overstated. So now let us proceed to 2019. So in 2019, the error is an overstatement of 7,000 pesos. So again, an asset has a direct relationship with net income. So if the prepaid insurance in 2019 is overstated, it means that the net income in 2019 is also overstated. And in order to correct the overstatement of 2019 net income, we need to deduct 7,000 pesos. Consequently, the retained earnings in 2019 is also overstated because the 500,000 net income in 2019 is part of the 2 million retained earnings. That is why, in order to correct the overstatement of the 2019 retained earnings, we need to deduct 7,000 from 2 million. And again, since an error in prepaid insurance is a counterbalancing error, it means that the net income in the succeeding years will also be misstated. So in this case, the 2020 net income is also misstated by 7,000 pesos. So the question is it understatement or overstatement? So since the net income in 2019 is overstated by 7,000 pesos, in order to self-correct the misstatements at the end of 2020 retained earnings, the net income in 2020 must be understated. So if the net income in 2019 is overstated and the net income in 2020 is understated, and both of these net income are close to the retained earnings as of the end of 2020, it means that the understatement and overstatement has already offset as of the end of 2020. So in order to correct the understatement of the 2020 net income, we need to add 7,000 pesos. And again, since the retained earnings in 2020 is already correct, there is no more adjustments in retained earnings. So to better analyze the effect of the error in the prepaid insurance in 2019, let us look at the journal entries recorded and during 2019 and 2020. So prior to the end of 2019, the prepaid insurance of the entity is overstated by 7,000 pesos. And this was overstated because the entity failed to record an adjusting entry at the end of 2019. And what is the adjusting journal entry that should have been recorded at year end? So that is debit insurance expense and credit prepaid insurance. So it means that the prepaid insurance of 7,000 should have been recorded as expense in 2019. But since the entity failed to record the expense, that is why the net income in 2019 is overstated. And in order to correct the overstatement, we need to deduct 7,000 pesos. And in 2020, there will be no more journal entry that will be recorded related to the 7,000 insurance. However, in the books of the entity recorded a journal entry in 2020 related to the 7,000 insurance, and that is the debit insurance expense credit prepaid insurance. So this entry was recorded by the entity in order to close the prepaid insurance balance of 7,000 at the start of 2020. So in order to close the 7,000, the prepaid insurance is credited for 7,000 pesos and was recorded as an insurance expense in 2020. So the insurance expense of 7,000 should have been recorded as expense in 2019. However, the entity recorded the 7,000 pesos insurance as an expense in 2020. That is why the 2020 net income of 550,000 pesos is understated by 7,000 pesos. And in order to correct the understatement, we need to add 7,000 pesos. Now let us proceed to accrued expense. So starting with 2019, so the first year with error. So the error in 2019 related to accrued rent expense is a 5,000 pesos understatement. And since accrued expense is a liability account, so what is the relationship of liability with net income? So since accrued rent expense is a liability account, a liability has an inverse relationship with income. So that is why if the liability is overstated, the income is understated, and vice versa. So in 2019, the accrued rent expense is understated by 5,000 pesos. It means that the net income in 2019 is overstated. Again, the relationship between income and liability is inverse. So in order to correct the overstatement of the 2019 net income by 5,000 pesos, we need to 5,000 pesos to the 500,000 2019 net income. And consequently, there is a deduction from the 2 million retained earnings also at 5,000 pesos because the 2 million retained earnings is also overstated by 5,000 pesos because part of the 2 million is the 500,000 2019 unadjusted net income. And again, since this is a counterbalancing error, the net income in the succeeding years will be affected, and the misstatement will result to the counterbalancing of the errors in the retained earnings in the subsequent years, which in this case is 2020. So if the net income in 2019 is overstated, it means that in order to self-correct, the net income in 2020 must have been understated. And in order to correct the understatement of the 2020 net income, there must be an adjustment of addition of 5,000 pesos to the 550,000 net income in 2020. And since the overstatement of the 2019 net income resulted to the understatement of 2020 net income, the retained earnings at the end of 2020 is already correct and adjusted. That is why there will be no more adjustments to the retained earnings at the end of 2020. So to better illustrate the reasons of the understatement and overstatement of the 2019 and 2020 net income, let us look at these journal entries. So the adjusting journal entry that should have been recorded by the entity is a debit to rent expense for 5,000 pesos and a credit to accrued rent expense for 5,000 pesos. However, the entity did not record any adjusting entry. That is why the rent expense in 2019 is under by 5,000 pesos. And if an expense is understated, obviously, the net income is overstated by 5,000 pesos. And to adjust the overstatement of the net income, there is a deduction of 5,000 pesos. And again, failure to record this journal entry, the liability that was presented in the Statement of Financial Position in 2019 is also understated. So if this journal entry was not prepared in 2019, what will be the effects in 2020? Since this is an expense incurred in 2019, which is still unpaid, that is why we should have recorded a liability, this is assumed to be paid in 2020. The journal entry to record the payment of the 5,000 pesos must be credit to cash for 5,000 pesos and a debit to accrued expense for 5,000 pesos. So we are debiting accrued rent expense in order to close the accrued rent expense that should have been recorded as a credit at the end of 2019. However, since the entity failed to record these December 31, 2019 adjusting entry, upon payment of the 5,000 pesos, the entry recorded by the entity is a credit to cash for 5,000 pesos and a debit to rent expense. The entity did not debit the accrued rent expense because the entity did not record any credit to accrued rent expense in 2019. That is why upon payment in 2020, the account debited is rent expense. And again, looking at the nominal accounts, the rent expense should have been recorded in 2019. However, it was recorded by the entity in 2020. So there is a difference as to the year of recording. So if the rent expense should have been recorded in 2019 and the entity recorded the expense in 2020, that is why the expense in 2020 is overstated and the net income is understated. And in order to correct the understatement of the net income, we need to add 5,000 pesos by reducing the rent expense. So now let us proceed to the last counterbalancing error. So that is the accrued rent expense overstatement in 2020. So that is for 4,000 pesos. And again, since this is a liability account, the relationship with net income is inverse. So the net income in 2020 is understated by 4,000 pesos. And in order to correct the understatement of the 550,000 pesos net income in 2020, we need to add 4,000 pesos to net income. And since this is the year the error was committed, the retained earnings at the end of 2020 is still unadjusted. So the 2.55 million retained earnings at the end of 2020 is also understated by 4,000 pesos. And in order to correct the understatement of 2020 RE, we need to also add 4,000 pesos. Then, let us analyze the effects of the 2020 errors in the net income and retained earnings by looking at the journal entries. So again, the error is due to the failure of the entity to record the adjusting entry on December 31, 2020. And that journal entry is a debit to accrued rent expense for 4,000 pesos and a credit to rent expense for 4,000 pesos. So failure to do this entry resulted to the overstatement of the rent expense, and that is in 2020. So if the rent expense is overstated because it was not reduced by 4,000 pesos, the net income is understated by 4,000. That is why in order to correct the 4,000 understatement of the 2020 net income, we have added the 4,000 pesos to the net income, as well as in the retained earnings for 2020. So this ends the analysis of the effects of the error corrections, which are all counterbalancing errors. So before the completion of the table, make sure that the equations are correct. For example, would be the accrued rent expense in 2018. So we have a negative 5,000 in net income, so that will be equals to negative 5,000 pesos. Then plus 5,000 pesos, it is 0. So same procedure will be for the 7,000 pesos negative is equals to negative 7,000 pesos plus 7,000 pesos is equals to 0. So always maintain the correctness of the equations per row. So now, let us determine the adjusted balance of the retained earnings and net income for each year. So starting with 2020, so the adjusted retained earnings at the end is 2,534,000 pesos. Then the net income adjusted is 540,000 pesos, so that is 2020. Then the retained earnings at the end of 2019 is 1,994,000 pesos, and the net income in 2019 is 491,000 pesos, the adjusted balance. And in 2020, the adjusted retained earnings is 1,503,000 pesos, and the 2018 adjusted net income is 603,000 pesos. And now, let us prepare the correcting journal entries. And again, similar to the assumptions that we made in the first problem, we are going to prepare the correcting journal entries based on two assumptions. The first assumption is when the 2020 books are still open or the 2020 books are already closed. Again, when we say the books are still open, it means the books are still open for adjustments to nominal accounts. It means that the nominal accounts are not yet closed to the retained earnings. However, if the books are already closed, the nominal accounts were already closed to the retained earnings. So among the books 2020, 2019, and 2018, the books in 2019 and 2018 were already closed because the current year is 2020. So our assumption first is what if the 2020 books are still open? So we can still adjust the nominal accounts. So when we prepare the correcting journal entries, looking at the table, the adjusting entries will be taken from these columns. So since the nominal accounts in 2020 are still open for adjustments, so we are still able to adjust the net income by adjusting the nominal accounts. However, we still need to adjust the net income in the prior periods, so that is 2019 and as well as 2018. However, we can no longer use nominal accounts in the adjustment of net income for 2019 and 2018. So in order for us to adjust the net income for the prior periods, we are going to adjust the retained earnings because the net income in prior periods were already close to the retained earnings at the start of the current year, which is 2020. So let us start with the first adjustment. So that is the 2018 overstatement of inventory. So for the 9,000 overstatement of 2018 inventory, as you can see in these two columns, there are no more adjustments to the net income and retained earnings beginning. Because again, this is a counterbalancing error. It means that the 2 million retained earnings is already correct. That is why there is no need to correct the net income due to the overstatement of 2018 ending inventory. So let us now proceed to the next error on inventory, so that is in 2019. So looking at the table, now we have an adjustment to be made. So that is a deduction from net income and an increase in retained earnings. So obviously, to increase retained earnings requires a credit to retained earnings. However, to reduce the net income, it requires a debit to a nominal account. So what is the nominal account that will be used to reduce the net income which is related to inventory? So of course that is cost of sales. So our entry would be debit cost of goods sold for 6,000 pesos. So this is the nominal account debited that is related to inventory. Then credit retained earnings for 6,000 pesos. The next is the 20,000 overstatement of the inventory in 2020. And looking at these two columns, the adjustment only pertains to the net income in 2020, and that is a decrease. Again, adjusting the net income requires nominal accounts. And what nominal accounts should be debited, since this is a decrease, that is related to inventory. So again, that is cost of goods sold. So our journal entry would be a debit to cost of goods sold for 20,000 pesos. And the account to be credited is the ending inventory. Since the error pertains to the ending inventory in 2020, and ending inventory will appear in the statement of financial position as of December 31, 2020, the inventory that will appear in the statement of financial position, if not corrected, will be overstated by 20,000 pesos. That is why, in order to correct the overstatement of the inventory in the statement of financial position, we need to credit inventory for 20,000 pesos. So now let us proceed to the errors related to the prepaid insurance, starting with 12,000 pesos, the understatement in 2018. Again, looking at these two rows, there are no adjustments to the net income in 2020 and retained earnings in 2019 ending, which is beginning for 2020. And that is because this error is a counterbalancing error. It means that the prior period net incomes were able to counterbalance the effect of the error as of the end of 2019. So it means that there is no more need to prepare any correcting entries related to the 12,000 error in 2018. So let us now proceed to the next error on prepaid insurance. So that is the 7,000 pesos. So looking at these two rows, we have adjustments on net income and retained earnings. So the 7,000 will be added to net income, which means we need to credit a nominal account in order to increase net income. And there is a decrease in retained earnings for 7,000 pesos. And again, a decrease in retained earnings requires a debit. So our entry would be debit retained earnings for 7,000 pesos, and the account credited is a nominal account that is related to prepaid insurance. So what would be the nominal account related to the prepaid insurance? So that is insurance expense for 7,000 pesos. Now, we are done with the prepaid insurance, so let us proceed to the accrued rent expense. So for the rent expense, again, looking at these two columns, we have adjustments on both net income in 2020 and the retained earnings beginning for 2020. So the entry would be a debit to retained earnings because the 5,000 is being deducted from the retained earnings of 2 million pesos. So that is why our entry is debit retained earnings for 5,000 pesos. And another adjustment would be a credit to 5,000 pesos, which will increase the net income by 5,000 pesos. So by increasing net income for 5,000 pesos, we are going to use a nominal account. And what nominal account is related to accrued rent expense? Of course, that will be rent expense. So that is why the account to be credited in our correcting entry is rent expense for 5,000 pesos. So by crediting rent expense, it will decrease the rent expense, therefore increasing net income. Then on to the last correcting entry, so that is the 4,000 pesos overstatement of the accrued rent expense at the end of 2020. So as you can see in the two columns, our adjustment only pertains to the net income. So it means we need to credit a nominal account, which is again related to accrued rent expense, for 4,000 pesos in order to increase net income by 4,000 pesos. So that is why our entry is credit rent expense by 4,000 pesos. Then, the account to be debited, of course, is not retained earnings because there is no adjustment in the retained earnings column. Instead, the account to be debited is accrued rent expense for 4,000 pesos because the accrued rent expense at the end of 2020 is overstated. Again, accrued rent expense is a liability account. Then this liability will appear in the statement of financial position as of December 31, 2020. And if not corrected, the accrued rent expense that will appear in the statement of financial position is overstated. In order to correct the overstatement of the accrued rent expense, our correcting journal entry must have a debit to liability, which is accrued rent expense for 4,000 pesos. So so that ends our journal entries if the books are still open for 2020. So if you notice, if two columns both have adjustments, our journal entry includes a nominal account and retained earnings. However, if the adjustment only pertains to the net income and the beginning retained earnings is not affected, our journal entry includes a nominal account to adjust the net income. Then, the remaining account is a real account other than retained earnings. which may be asset or a liability. So that is applicable for the 20,000 pesos adjustment and 4,000 peso adjustment. So if you can see, between these two columns for the 20,000 and 4,000, the adjustment is only under the net income column. So that is why when we prepared the correcting journal entry, we used one nominal account and one real account other than retained earnings. So it's either an asset or liability. Now let us proceed to the preparation of correcting journal entries, assuming the 2020 books are already closed. It means that the nominal accounts are already close to the retained earnings, and we can no longer adjust or correct the net income in 2020. What we can adjust is only the retained earnings at the end of 2020, because all nominal accounts for 2018, 2019, and 2020 are already close to the retained earnings. Again, since the books in 2020 are already closed, we can only adjust the retained earnings account. So that is why our correcting journal entries based on our table will be coming from this column. So the last column for retained earnings in 2020. So by looking at this column, we only have two adjustments. So that is the 20,000 pesos and 4,000 pesos. So it means that when we prepare the correcting journal entries, this would only include two journal entries. Or you can prepare the journal entries if the books are closed by copying all these eliminating entries and replacing all nominal accounts with retained earnings. So let us start. So for the first entry, we have here a debit to cost of goods sold and credit to retained earnings for both 6,000 pesos. And between the two, cost of goods sold is a nominal account. So that is why if the books are already closed, it will be replaced by retained earnings. So that is why if this journal entry will be recorded in the 2020 books, assuming the books are already closed, the journal entry would be a debit to retained earnings for 6,000 pesos and a credit to retained earnings for 6,000 pesos. So the entry would include both retained earnings, debit and credit for 6,000 pesos. So that is why there is no more need to prepare a journal entry for the 6,000 pesos because again, based on our table, the error has already counterbalanced. Then let's proceed to the next entry. So here we have debit cost of goods sold and credit inventory. So cost of goods sold is a nominal account and inventory is a real account. So that is why if this journal entry will be prepared if the books are already closed, the cost of goods sold will be replaced with retained earnings. So since the debit will become retained earnings and inventory will be credited, both are real accounts but the other is an equity and the other is an asset account. So that is why our first journal entry, if the books are already closed, is a debit to retained earnings for 20,000 pesos and a credit to inventory for 20,000 pesos. Again, comparing these two, the only difference is the nominal account, which is replaced by retained earnings. Then let us proceed to the third entry. We have here retained earnings debit and credit expense, which is for insurance, which is a nominal account. And if this entry will be recorded when the books are already closed, the expense will be replaced by retained earnings, which means the entry would be both debits and credits are retained earnings. That is why the 7,000 is no longer recorded as part of the correcting journal entries when the books are already closed. And that is why our table, there is no more adjustment on the 7,000 in the retained earnings column for 2020. The next entry is the 5,000 pesos. The 5,000 pesos is debit retained earnings and credit rent expense. Again, between the two, the nominal account is the rent expense. And if this entry will be recorded when the books are already closed, the rent expense will be replaced by retained earnings. And again, both debit and credit will be retained earnings. That is why there is no more need to prepare the correcting journal entry for the 5,000 pesos, same as in our table, because the 5,000 has already counterbalanced at the end of 2020. So let us proceed to the last journal entry, which is accrued rent expense debit, then credit rent expense. So accrued rent expense is a real account, which is liability, and rent expense is a nominal account. So that is why when we prepare this journal entry, if the books are already closed, the rent expense will be replaced with retained earnings. And still, the accrued rent expense account is debited. So since the accounts debited and credited are different, so this will be our second correcting journal entries for this assumption. So our journal entry will be debit accrued rent expense for 4,000 pesos and credit retained earnings for 4,000 pesos. So this will be our correcting journal entries based on two assumptions. Now let us proceed to the statement of changes in retained earnings. So to start the statement of changes in retained earnings, our first line item will be the unadjusted retained earnings beginning. So the current year is 2020 and we are going to prepare the comparative financial statements. So the 2020 will be comparative with 2019. However, the 2019 that will be presented side by side with 2020 should already be corrected, because in 2019 financial statements, the account balances are still prior to correcting entries. Then, after the unadjusted retained earnings beginning, next is the prior period error corrections. Then, after we reflect the corrections of the prior period errors, this is the adjusted retained earnings beginning. Then we will add the net income, and assuming there is no dividend payments, and since the problem has no dividend payments, so that will be the retained earnings ending. So let us now prepare for 2020. So starting with the unadjusted retained earnings at the start of 2020. So that is the ending in 2019. So that is 2 million pesos. So that is for 2020, the unadjusted retained earnings at the start is 2 million pesos. Again, this is the unadjusted retained earnings at the end of 2019. Then what is the net effect of the adjustments to the 2 million retained earnings? So that is 6,000 pesos negative. And that is the net effect of these three adjustments. So that is negative 6,000 pesos. So these are the adjustments for the 2 million pesos to arrive at the adjusted retained earnings at the start of 2020, which is 1,994,000 pesos. Then let us add now the net income. So what is the net income to be added to the 1,994,000 pesos? So based on this table, the net income that is added to the 1,994,000 pesos is the adjusted 2020 net income of 540,000 pesos. Then 1,994 plus 540 is the adjusted retained earnings in 2020 for 2,534,000 pesos. Now, after 2020, let us proceed to the earliest prior period presented in our comparative financial statements. So that is 2019. So we are going to present the revised 2019. So starting with the unadjusted retained earnings at the start of 2019, which is the retained earnings ending in 2018. So that is 1.5 million. Again, this is the unadjusted ending retained earnings in 2018. Then, what is the net effect of the adjustments or the corrections to the 1.5 million pesos? So that is a positive 3,000 pesos. So that is the net effect of the negative 9,000 and positive 12,000 pesos. So that is positive 3,000 pesos. So after these correcting entries, the adjusted retained earnings at the start is 1,503,000 pesos. The adjusted retained earnings at the start of 2019. Then we are going to add the net income. So which net income will be added to the 1,503,000 pesos? So the net income is the adjusted 2019 net income of 491,000 pesos. So 1,503,000 pesos plus 491,000 pesos, that is 1,994,000 pesos, which is the adjusted retained earnings ending in 2019. So this ends the first part of our discussion on prior period errors. Again, the topic that we have discussed in this video is about counterbalancing and non-counterbalancing errors, which are errors that affects both statement of financial position and income statement. Again, we have other two types of errors, the statement of financial position errors and income statement errors. Again, the statement of financial position errors only affects the real accounts, and the income statement errors only affects the nominal accounts. So for these two types of errors, these are easier compared to the counterbalancing and non-counterbalancing errors because their correction procedure is not as hard as counterbalancing and non-counterbalancing errors, because they just involve reclassification of accounts from one real account to another real account or one nominal account to another nominal account.